When you see things like this, you now know the market is not in a good situation. And we all understood that. And at the same time, you look back at July and it's like, okay, 160 public investments totaling 1.91 billion in crypto. So venture capitals are entering, and this is not small. And it's like, okay, gaming, a lot of different stuff, but entire market is getting attention and money is moving in. So as the market in stock also bounce, there's not just a small move up, but yes, you need to agree that the Coinbase stock went a lot down. So sometimes 100% move is not enough to make it up. But right now, you have a lot of opportunities in the market. You're looking at the market and you're like, okay, I'm looking at this to understand the fundamentals, to see how things are evolving. And you are like, okay, I kind of get that point. Asset with utility is the key. And when you're looking at this, it's like Cambodia, Indonesia, Malaysia. It's going through everywhere with the on-demand liquidity. And then you're like, okay, yes, I do get that point, but the price is not moving much. This is where we are. A zoomed in view kind of gave us this idea that we broke this one, fine. We've been correcting ever since. We are slow, we are coming back down. Now we're kind of at that level where we are flirting with the 21-day moving average. Now a bounce from this level allows us to confirm that this trend is slowly changing. So if you are looking at this, you would be like, okay, fine, what am I looking at? You put a base here. Now you're trying to make a new trend where you have already made a higher low and this was your previous high. So right now you already made a higher high. So if this is what you're looking at, then you really want the price to bounce, right? So this would be your next neckline break as you go above. So you are waiting to see this to confirm that the trend is starting to move back to the upside. Now that's on a 3-day chart, because on a daily you already see how things are evolving, because on a 4-hour, 12-hour, you're already looking for bulls. Things are evolving really good in these areas. Now, in general market, the general crypto market, you're looking for last 1 week. You're like, okay, a lot of coins are up and down. It's kind of a mixed market right now. But certain coins, if you're looking at them on a monthly, say ETC, if you're going to look at them on a monthly basis, you see that 133% up, but on a weekly, 15% down. Now it makes sense. Like these coins which ran higher last month, now they're slowing down. Now that's the normal old correction which we are looking on the market. But right now, inside this market, if you are looking at last 1 day, you see that the general market is slow. But some of them are slowly starting to pick up the pace. So you go here, you look like last 24 hours, how things are moving in the market, and you get the taste of it. Slowly, coins are coming back up. And some of them are getting close to a breakout, right? They had a pattern, they are ready to break out, and you know that. A lot of coins broke higher last week. Some of them are closing in on our targets. We are trading in some of the positions, and the market is showing you that it's in a favorable situation if you know how to trade. Now, not highly leveraged, highly risk taking trades. We are talking about the normal low risk trades. We are looking for, entry. You enter there. It's like a swing trade, but not for a daily. It's like a weekly to monthly. That's actually better. You reduce your risk, you take your profits, you move out. Now, in this general market, it is still above the 21-day moving average on a daily. That's actually a great news, because as you zoom out, you go on to, say, 3-day chart, you still look like, okay, price is above the moving average. Indicators are slowly grinding back to the upside. Now we need to break higher, which we haven't done at the moment. Now, if you are looking at that, this is where we are right now. We definitely need to break higher at this point, but we don't want to get rejected. Now, one thing which you all have to keep in mind is that the price is moving. We understand that. We are inside this pattern. We haven't broken higher. But we are so close to the resistance that breaking higher from this point may not be too much of a big deal. Because if you are connecting the MACD, it's about to cross to the upside, so close to that point where you may start a rally soon. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. Now, it's been 3 days since the last video, and I've told you like I was traveling, so couldn't actually do more consistent on a consistent basis. So sorry for that. Now I'm trying to catch back up to the market, and we are looking at the market in a way like, okay, we are slowly moving back up. We regained the 21-day moving average. We broke higher from this pattern. So what we are looking at is the short-term pattern breaking to the upside. The medium-term pattern, we still have resistance all the way up to 28-30 range. So now we have to go higher and test that in terms of price. But on a daily, it shows like we are slowing down. Now, if you take a step back and look at this, like, okay, we are slowing down on a daily. What does the indicators show you on a weekly? And you're like, okay, the MACD is trying to cross back to the upside. Now, there are certain stuff which you have to keep in mind. Last time when we tried to break higher here, the price came to the moving average, tested the moving average on a weekly, you stayed below that. Now, let's put that into perspective. If you take that and come to the current level, we are still close to $30,000, right? See, the price is coming higher. The moving average is coming down. So still, that is where we are going and reaching $28,000 to $30,000 in terms of price. So right now we are $22,000. So if Bitcoin can actually do a 30% run, you all know that other altcoins are going to run even higher. Now you take the same perspective to compare it with the market. Say we'll use Ether. You actually saw like, okay, we were getting really bullish. We were getting that 3 soldier. We came back. We retested the moving average. We bounced. Now that bounce ended up here at this level of resistance. Fine. We are not able to break that to the upside as of now. We are still trying. We're not getting rejected completely with a red big candle to the downside. We are still staying up, but you can't neglect the factor that we may come back to the moving average, right? There is a possibility. There's always a possibility for that. Now, on a daily, if you still keep this 21-day moving average and bounce from that, now your level of resistance is around 1,750. So you need to break through that. So say move above 1,800, 1,800 for Ether kind of brings you back to that bullish territory. So now taking the same ideology and going towards the altcoin market in general shows you like, okay, that move can still push us up. Remember, we've been talking about this move since the time we were here, and it did not happen in a day or two. We are slowly grinding back up. So if you're looking at these bottoms, we are already close to 100% up. Now you see like, okay, I don't get the actual bottom. I'm 50% up. That's still not bad, because at this time, some of the assets have already gone up in crazy numbers. They are doing kind of fine if you are in the market looking like last 30 days and you were in the market trying to average down. This is going well. Now, you understand one thing, like, okay, the market has not been the best for the last 1 year. Certain coins were okay, certain coins were doing really bad, going as low as 90% down. but some of them were showing you massive opportunities. And that's why in last month, you see a lot of them in green. So if you were taking benefit of that, taking averaging down, now you're at least 40 to 50% up. Fine. You happen to enter a little bit late, you're still 10-15% up. Now give it another month or two, and you will see those positions going 100% up. You can come on, look at these same assets based on liquidity and try to look like, okay, if it's like $1,000, $2,000 in liquidity, or even 10,000, I would say like, okay, take a step back, guys. Be a little bit conservative, move out. Now it's completely up to you what you have to do, but make sure when you're putting money in, you understand that money is coming in. Now, at this point, when you are looking at the Tether and observing like there's a massive buy sale happening in the market, your volume is slowly increasing, and XRP's volume is really comparatively much lower than what it used to be. We are looking at a price consolidation, but price of XRP has not dropped substantially. It's still managing there. Now, for you to get a better clarity or reduce the noise in the market, now the market is already low in noise for XRP right now, which is a great deal. And you look at how the trend is changing. You can actually go look at different charts. This is Heikin-Ashi, which kind of gives you an idea about whether you are turning green or you are going to go into red. It kind of gives you that ability to understand, okay, this is the market structure. You've been coming down. Now we are breaking back to the upside in the positive move. Now, where are you? You are somewhere close here. So to move and test till this, you still have room to the upside. Now, yes, on a weekly, you do need to get that volume candle, which kind of push you up to 0.5, and we're waiting for that. But things look really favorable for a move towards 0.5. Now, we've been waiting for this from some time, but right now, it's slowly changing. One of the benefits here you see is like when you get this green candle and you're entering, it's like 1, 2, 3, 4, 5, 6, 7, 8 times you are correct. And then, okay, once you're wrong, then you exit. So now it's continuous. So this helps you to understand where the momentum is. It's one of the easy stuff you can do in the, now if you have a paid version where you can go Rango charts, range charts, that also helps. But if you understand the market structure easily, then you're like, okay, that asset as of now is showing you this possibility of a rounded bottom. It can be a cup and handle. There can still be a move to the downside. So this is on a weekly. So as you go on a 3-day, you may still see a cup and handle pattern or just a general rounded bottom breaking to the upside, going all the way up. Now, that's for XRP on a short-term basis, right? So if you are an XRP guy looking at this asset on a long-term basis, now to become ultra bullish, fundamentally there are thousands of stuff, but technically you really have to come back. So the first level is this one, which we just talked about. But the second level, the key major level is here. You need to come back towards $1. Now that's current from this area where we are from. That's a little bit of run to the upside, but yeah, we do have to break above that to bring a ultra bullish momentum in terms of technicals. Now we see on a fundamental basis, XRP is doing great, coming up with a lot of news, a lot of adoption. It is still one of the best asset out there in the market, but you know that the market is not rational most of the time, and that's when it actually gives you opportunities. Right? You go into this return rates, we've been through this a lot of time. You look like last quarter, some of them ran higher. And you're looking for last 1 year, what they've been doing. Are they changing? So if they are changing their structure, slowly going back to the upside, now you want to have a look at these assets where they are trying to come back up. Some of them which is hitting the bottom. Fundamentally, it's getting stronger. And that's becoming more of a value proposition, right? You pay a price, but it depends where you pay that price completely based on that asset. Some of the assets can be down 99%. You buy them, you still lose 100%. Some of the assets which have dropped 80% and the value of the asset is skyrocketing, you kind of manage to get about 10x, 20x. It's not something small, because we all understand that the general altcoin market is standing in a place where we are in a descending broadening wedge, which is bullish. So that's one reason to be bullish. Historically, this pattern shows here we go back up. Now, if you are looking at the general market, a lot of human beings right now who are in crypto, who are new to the crypto, don't look at things like what we are doing right now. Because if you go look at things right now, you actually have something familiar here happening, right? You zoom in just to get a bit more clarity here, and you're like, okay, the price is here testing in a short-term pattern. Now, that's short-term when you're zoomed out and your view is last 10 years. Medium term when you're looking for last 1 year. So if you are looking to try and predict for next 3 to 5 months, most likely you are looking at last 1 or 2 years. And if you are looking at next 1 or 2 years, now looking all the way back towards last 10 years helps a lot, because you definitely need to know how market reacted for this particular asset class at what different levels of upside. Because now what you're looking at is like, okay, the price has slowed down, but this is close to the historical level of support. And if we are bouncing through this, what's the level you want to pass? Next 5-10%, we are reaching that bullish territory. And remember, as we go through this bullish scenario, yes, we do have a lot of upside, but you definitely need a lot more patience than you think. Because the market never gives you what you want in a go, even though you understand the macro and the long term. We all do take our time to learn from the market, and we do understand that the market is hitting a support. It's slowly bouncing, the strength is increasing, but to become that ultra bull in this asset, you don't, in this time frame, looking at this chart, you don't need much. But if you are trying to trade this market on a medium to long term basis, now what you want is a breakout here. You are literally waiting for that breakout, and once that happens, the price is going to go in a FOMO. You see this, right? You go above the 21-day moving average, then you start gaining pace, and then boom, fine. And when that comes, will you be still here is going to be a huge question, because as of now, you look at the general market, it's not a good area in the market. Even big institutions are having liquidity crisis. So if you have big purchases coming in, make sure you want that to happen right now. If you have a lot of parties, if you have a lot of celebrations coming in, make sure you don't overspend yourself and put that into that range where you're overexposed to the market. Meaning, imagine you have 25% dry powder, and right now, before you spend any of that, you are in a good situation for this market. But then some expense comes up, you put a lot more money than expected. Now you don't have much liquidity. So any emergency can push you to sell in red, take the hit. And that's exactly what I meant by getting overexposed suddenly. Because you are completely planned, you're well understanding is there that the market is trending like this. And when it is trending higher, you really don't want to exit the market at half of that cycle. You really want to get to the top or somewhere close. Even if you don't get the absolute top, you kind of get the price showing you the way forward. Now, you have different divergence coming in if you look at it on a different time frame. So keep this in mind as you go through this level of bounce and reach this level of target, which would be your previous high. If you're trading, take some of your profits. And always keep an eye on what Bitcoin is doing, because it kind of tend to lead the market. And if you are observing a buy here with a bounce, that is going to be crucial. Now, yes, you are looking at a daily chart and you are like, okay, we are testing the 21-day moving average. We need to bounce all of that. But I would say, like, even if we drop back to this level, it's not that concerning, right? If you go back to 22, if you go back to somewhere close to 21,500, I would still say that's not bad. But what we have to keep in mind is that on a daily, you are kind of slowing down on the trend. You do have to bounce from here or else it kind of slowly come back and seep in towards your 3-day chart. So if you are here trying to hold back and bounce, that's good, great. But breaking that to the downside is not the favorable step you want. What you want is a break to the upside, but instead if you're getting that short-term break to the downside, now what you're looking at in terms of strength for the market is that the market coming back lower. So it do have room to come back down in that case. So that's when I'm saying like, okay, if the market drops, it can drop all the way back to 21,500. So if you are in leverage trades, leverage positions, it can really hurt you. Don't be in that position. Whereas if you are in good assets, or at least positioned well to take benefit of any up moves in these assets, that's good. So if you want those kind of updates for a little bit of trading here and there without too much risk, you can look at the Patreon. The link is given in the description below, where we post a lot of opportunities and any trades which I do. When I start the trade, when I stop the trade, I give all the information to you, so you now know more information to take better decisions. So guys, if you received value for your time, please do hit that like and subscribe button. I'll meet you on the next video. Bye for now.